Hello friend, let's talk about weekly commentary on commodities, in particular on bullion and in energy segment. Last week we have seen MCX gold prices were closed on a positive note by 0.48% and closed at 51,874 levels. In international market, it increased by 0.50% and closed at $1774 per ounce. However, we have seen negative closing in silver prices. M6 silver down by 1.72% and closed at 57,364 levels. In international market, it closed down by 0.48% and closed at $19.88 per ounce. Weakness in dollar and lower bond yield were supported to gold prices. Geopolitical tension between China, Taiwan and US is also playing a major role for supportive for the gold. However, due to this tension, we have seen lower demand of base metal and in industrial metal put pressure during last week, and we have observed that crude oil, base metal and silver corrected sharply. For the next week, we are expecting a positive trend may be seen in gold and silver prices. MCX gold support at 51,300 and then 50,800 levels. Resistance at 52,200 and then 52,700. Traders can buy gold around 51,300 with the stop loss of 50,800 levels and for the target of 52,200 and 52,700. For silver, they are also going for go for buy in silver prices. Silver has a strong support at 56,500 levels and resistance at 59,000. As we have seen a negative trend in the silver prices, so we are expecting a range bound movement with positive bias. So we are recommending buy in silver on support level. Physical demand is also increased in India on the back of upcoming festival season, and also we have seen sharp increment in gold and silver ETF. However, SPDR gold share was increased by 1.6% in last trading day. So we are recommending buy in gold and silver for intraday perspective. Now let's talk about the crude oil. Last week crude oil prices corrected sharply. MCX crude oil corrected by 9.64% and closed at 7,086 level. However, Brent crude oil prices corrected by 9.22% and closed at $93.53 per barrel. Fear of recession and lower demand of crude oil put pressure on crude oil. Recession worries have intensified since the Bank of England were warning on Thursday of a drawn out downturn after its raised interest rate by most since 1995. The OPEC Plus producer group agreed this week to raise its oil output goal by 1 lakh barrel per day in September. This will impact a negative for crude oil prices, and we have seen a correction in crude oil prices last week, and also we are expecting that crude oil prices may trade lower and it may test $90 to $87 per barrel very soon. So the trend of crude oil is negative, so we are recommending sell in crude oil for the weekly perspective. We hope that you will be benefited from this commentary. Thank you.